from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at what happened in the market during the previous week and learn something from it and plan for a better trade for the next week. That's for the week that's starting from March 27, Monday, tomorrow, 2023. Let's get to the charts right away. Meanwhile, if you're not subscribed, please subscribe and share it to your friends and colleagues. Thank you. So here we go. We have the weekly charts in front. Left side Nifty, right side Banknifty. Clear bearishness. New swing low is made on the Nifty, and weekly has a small body on the case of Banknifty. So bearishness is evident. It is trending down, but at the same time, you have to make a note. This is a support zone. Major crucial previous swing low support zone where we cannot roll out a retest of that and then a bounce up from here. Change in priority bounce cannot be rolled out on the weekly charts. That's the same with the case of Banknifty. As Banknifty relatively did fall on the Friday. Let's look at the daily charts. What is this? Daily charts of Nifty is showing wide range bearishness. It's a candle that has completely closed below the previous several days. 6-7 days of gains are all wiped out on a single day. In the case of Banknifty, it is not that much harm, but definitely Friday it gave up. So the entire fall in the Banknifty happened on Friday. Otherwise, throughout the week it was hanging on and holding the strength, and it gave up on the Friday. So that's what you see on the daily charts, the short-term charts and weekly charts. It's clearly showing that overall bearishness there. Let's get the numbers and see. It's a 151 points loss on the Nifty and a 220 points loss, 0.56, 0.5%, 0.88, close to 1% on the Nifty. That's a fall. And Nifty is closed below the 20 and the 50 weekly moving average, and Banknifty has closed below the 20 weekly moving average and the 50 moving average also. So it's 11% and 12.5% of correction to all that has happened so far. We have a small body bearish weekly candle that is formed on the Nifty, while we have a dodgy or indecisive small body candle is what you see in the case of Nifty on the weekly charts. The short-term charts, wide range bearish candle on the Nifty, and again a bearish closing or a bearish candle on the Banknifty is what you see. Right? So 0.5%, 0.56, 221 points lost on Friday, and the entire week also is 0.56. So Banknifty is showing strength till the Friday fall. Nifty was weak and made new swing lows of the Banknifty didn't know. But Banknifty managed to close about the 200 exponential moving average, right? And Banknifty is below the Fibonacci 38, but Nifty is below the Fibonacci 50 also, right, from the previous major swing low. If you have a retracement of Fibonacci. Now, we know that it's a lower low, lower high pattern that's formed on the short-term charts. On the long-term charts, it's a higher low, higher high, which will get breached if the 1767, 750 is breached on the Nifty. Nifty is similarly very close to breaching that below the 38,500 close, nearby zones, 38,400 basically. So the lower low, lower high on the short-term daily charts would be negated only if the Nifty moves above the previous swing highs of 17,800 and Banknifty 41,671 is above. Downside, the risk or the levels of support would be 16,750, 16,650, but the previous swing lows and the gap supports are there. And 37,386 is not 13, 37,386 is the swing low on the Banknifty on the low side. And Bollinger Bands again also indicates a downside expansion. Bearishness expansion indicates bearishness, and below the 20-day and median also. There is a volatility divergence. W pattern bounce up is possible. It's a volatility divergence on the Bollinger Bands also. If you're not aware of that, please check the playlist for the technical analysis playlist. You'll find what is volatility divergence. So that's a bullish pattern. It's not confirmed, but that possibility is also there along with this change in priority bounce and the support zone that we already discussed. So that's what the price patterns are indicating. The Bollinger Bands, right? Expansion on the downside. So the Bollinger Bands expansion on the downside. Daily charts bearishness, weekly charts bearishness, still very close to a support zone. This is what we made. Another view. This is the major resistance zone, from where it had fallen down now. Banknifty also, this is surrounding pattern, the major resistance zone, because that's from where the breakout last time happened to make a new all-time high, which and then the index just failed to hold on to that and then fell down. Right, another view of the same that we discussed previously. Now look at the support resistance levels. Right, this is the parallel channel, that the trend line channels that is drawn on the Nifty charts. You can see that the swing low Fibonacci 61 is coming at very close to the gap support and the previous zone lows at 16, 750, 16, 650. So the confluence of support is what you see there. Right, so that should, even if the market is going to correct some more, right, it can get a very good support at this zone, as what is indicating, because there's multiple supports, right? And on resistances, see the Fibonacci 50 says resistance upside immediate would be the 17300 zone, right, which is having the 20 exponential moving average also, and the previous swing low also. That is where it failed multiple times. 1, 2, 3, 4 times it went to break out the 200, 70, 200, 250, 20, 200, 300 zone. So 17300 will be a major resistance zone upside. After that you have the Fibonacci 23 at 753. Then you have the 200 DAMA that will come in, at near to 7400 levels, right? And then gap resistance is that 7573, and then you have 1500 DMA is also coming close by. That 17800 is where, if at all there is a hope of a comeback, so that would be again confluence of resistances, which the previous swing high would be reached on the upside, and also the channel breakout also will happen, and the gap also is there, which is unfilled, and that can also give a very good up. So until then, it would be just some relief rallies that may happen and then get eaten out in between, right? So this is the level you have to watch on the downside. The major Fibonacci 61 supports 16 750, 16 650 gap, Fibonacci 61 previous swing low, all those. If that is breached, then you will reach 16 359. That's the zone where we have next support. Until then, it's a free fall. Making out of these levels on the Nifty. Banknifty similarly, if you draw a trend line like this, you can see that it has managed to close around the 200 DMA. So that would be the first support on the downside. And that's at 39 350 zones. If that's breached downside, you have Fibonacci 51, 38 642 is there. That's breached, the next swing low would be 37 386, and then if that is breached, we have a next gap which is in confluence with the Fibonacci 16 at 36 808. That is the ultimate. If that is breached, then Fibonacci 61 from the previous swing low, if that is breached, then there is very little hope from there. So that's very far away. 36,000 and 39,000 is very far. So immediate fall, could happen to 38 642 levels for the previous swing low or test area is there, right? Maximum, if it falls further also, it will take support near to the 37 386 is the last points, right? Now down upside, 40,201 would be the zone where you have the major resistance now. That will be the 20 DMA resistance, right? And after that you have the gap resistance at 41,200 nearby zone, and then you have 41,671, which will be the previous swing high breaching. That will mean that there is some upward traction that could happen above, leading to the full resistance again at 42,000. So 42,000 is cleared, means then you can hop just like 17,800 on Nifty. 42,000 will be the sacrosanct zone from which we have to be cautious on there. From more, we can have some hope of a rally on the upside. Downside we also already discussed. Let's get into the momentum. We are analyzing the weekly momentum as well as the daily momentum. Nifty on the top, Banknifty on the bottom. Nifty, what you see there is it's just hanging on the momentum sideways zone. In the case of Nifty, Banknifty is also in the sideways momentum, but the daily momentum both are in the bearish zones. Banknifty is just on the edge, hang on the sideways, you can say. So momentum is clearly towards the bearish side on the medium term and the short term, but Banknifty is just momentum is sideways on the medium term and bearish on the short term. That's in a nutshell. But Banknifty is trying to be on the edge and managing to hold on the sideways zone in the short term. That's not it. ADX, it's bearish across weekly and daily, short term and medium term. It is bearish, and then it is having rising stance. So this trend is clearly bearish. Momentum, there is some momentum that's left in the bank which is showing some strength, and it is also falling down and getting towards the medium term bearishness also, which is very dangerous, right? Till now it was a bit short term, so it's almost got into bank. Nifty has already got into it. I mean, Nifty has already got into the bearish momentum in the medium term also, right? So momentum is clearly bearish. So that's something you have to keep a note on, right? So volatility, it is a 3% up of the VIX. India VIX is shot up 3% up. It's small, but you have to understand that it has had 16% of spike that happened within the week. There is huge volatility that we saw last week, right? And it's outside of the lower reaching minimum. It's 15.24. It went up to 16 plus. So volatility is high. There is fear in the market, definitely. Look at the open interest data on the Nifty. It's a short build up on the Fridays. Futures OI is showing short build up, and it's a long unwinding that is shown in the bank. That's also bearish in nature, right? So March 29, the next expiry will be a monthly expiry, right? And according to the PCR, 0.67 is what it shows for both indices. 0.67 PCR is closer to the bearishness than the bullishness. So it's bearishness that is projecting outside on the both the indices, the short term and the medium term, the options high and futures high. And India VIX also is outside on the lower into the higher reaching it is getting to. So you have to be cautious about that. So peers dominating the momentum, peers dominating the trend, peers dominating the volatility, peers dominating the price action that we have seen so far. Right. So look at the support resistances that you can see based on the maximum put and call writing zones of the Nifty and the Banknifty. The highest supports for the Nifty put writing is seen at 17,000. Highest resistance is the 18,000. Second highest put writing is seen at 16,500 and 17,100 on the Nifty. And Banknifty 39,500 is where the highest put writing, and that's where the supports are. 40,000 is where the highest resistances that is seen on the Banknifty. Second highest put writing 39,000 and 40,500. 70,000 and 18,000 is a wide range for the monthly expiry that's less than 5 days from now. So 1,000 points range on Nifty. Remember previous weeks we had 200, 300 points range, narrow range. Now we have 1,000 point range. Weekend that, remember the next week is the truncated week as well, right? And it's a monthly expiry expense. So it's going to be very, very crucial volatility is seen by the option writers. 39,500 and 40,000. Bank Nifty, the option writers are not seeing that much of a breach, which is positive again here. The range is only 500 points, right? But Nifty, market, there is huge volatility that is expected by the option writers, right? So that is something. So 16,500 is the second level of put making note of it. So correlate these levels that is shown on the maximum places where the option writers are written, and then correlate that with what the price action and moving average and support resistance that we discussed earlier. Then you will get to know an idea on where we have to make the entries, exits, and all that based on the probability. Moving on, what we analyze now is how the industrial sectors performed. It's a bearish picture there as well. It's IT sector, which is down 3.2%. Metal is down 4%. Auto sector is down 1.2%. Realty is down 4.6%. So the only small place where there is green that is seen is at pharma and FMCG, 0.5% that too, right? Pharma 0.7%. So slight green on a weekly basis is seen only on the pharma and FMCG. Other sectors are all in short-term bearishness, and IT and metal especially are in the bearish zones, where you can look for the short trades because it's bearish on weekly as well as short-term daily, right? So that's the picture. Let's look at the charts. Left we have the IT sector, which is given up, but almost towards the support zone. If that is breached, we have trouble. Momentum is dipping, still managing the sideways. Metal again falling down from the big small recovery that it showed earlier. getting into the bear zone almost. Already got into the bear zones. Only medium term as well. Auto, back to the neckline zone. Any breach from here next week. Big fall. Pharma has had fallen earlier much and remains in the bear zones, but small green was seen this week. FMCG also small green was seen as the strongest among all the sectors remains in the sideways momentum about a crossover, but as long as this neckline is not breached, it should be okay. But FMCG is holding, it's a defensive sector, holding market reality, also on a neckline of a breakout, but had given 4% plus kind of cut, but hanging on the sideways momentum since very long, right? So the most bearish is IT and the metal, but be cautious, and short trades can be attempted there, but other sectors, so it's bearishness all around. And only place that you don't see bearishness is FMCG. Rest all sectors are bearish, no doubt. Now, industry heavyweights that constitute most to the index. Those stocks which are heavyweights that contribute most to the index is what we are trying to see. HDFC Twins, obviously. HDFC Bank maintaining the sideways, closed out the bear zones. Already it is in a bear zone, even then it was consolidating in a very wide range, in a flag and pole rectangle box consolidation. What you see there, and it should continue to do that, maintain the momentum at sideways, it should be fine, but it's falling momentum and bearish trend. HDFC also consolidation in since long time and maintaining the sideways momentum. Reliance, it's on the edge decline, already fallen to bearish zones on the medium term. So it's a heaviest contributor, one of the heaviest contributor to the index, and if this is going to slide down further, would mean deep trouble. And that's what the momentum indicators are showing. But remember, we have some support here because it has been zigzagging in rectangular fraction in the zone for since long time, so that gives some hope, but it's at a very crucial low time near below 2100 is 2200 nearby zone is what Reliance is trading on. Now these are the troubles, right? When the banking crash happened, or the IT stocks in our country has battered even when the Nasdaq was trying to move. TCS taking the moment of support and falling down from the trend line from with resisted multiple times. Infi had been falling, doing zigzag WM pattern since long, unable to break out of that since long. Now again back to a crucial support zone. Now this supports where the IT stocks are there right now, 2933 and this 138. If that is breached and falls further, means we have trouble. If it consolidates here or gives some more up more green, it should be okay. But if that's going down, then we definitely have trouble. IT is one of the defensive stocks that used to hold the market when there is trouble in other sectors, banks or whatever. Now IT is a crucial foreign money generator of the country is in trouble, then we are in deep trouble. The banking index, ICICI Bank is another major index which is showing some green despite all the volatility. It is maintaining a clean close at 852, showing much strength as compared to other banks. Black had is zigzagging and moving between sideways and bearish zones, but basically it's consolidating since long time in a particular range. That's what Kodak Bank is doing. ICICI showing strength, but again for ICICI also this is a crucial zone, this trend line. If that breaches, then we have trouble. Momentum is sideways. So HDFC Bank and ICICI Bank is still not fully lost because that's part of banking. This bank index itself is showing some strength because it fell only on Friday last week. So there is some strength in the banks there left, but IT is creating big trouble and Reliance, because of the oil fall, some other reasons. So Reliance, one of the major heavyweights, is giving a lot of trouble along with the IT. So that's what is causing trouble to the index. But this is some interesting data that you can see there. The Fyers sold 6,650 crores. You can see that they have been consistently selling almost all days in the March, except for 3 or 4 days was small buy. And one of those was from Adani, stock buyback by some US stocks. Otherwise, excluding that, hardly any good buy has happened except for one day on the Fyers side. And DIs have been consistently buying. And last week we had a mutual fund debt mutual fund trouble, the STT tax hike. All of this has impacted the market, and that is very clear from here. So it's 6,600%, 9,428 buying by the DI. So net to net it is positive, but still the market is down by nearly 1%. So that means the retailers, other players in the market other than the Fyers, are panicking, and they're selling. So that is what we can read from this, based on this. So otherwise, derivatives from the Fire DI side also has moved up. So overall, the DI part net FIs are selling is a trouble. They have been continuously selling unless they buy. Nothing is going to change the markets. It's that, but DIs have been supporting the markets and then balancing it out. No, even that is not helping. It means there is heavy bearishness that has come in because of the bad news flow across. That's what you can understand by the institutional participation here. Now over here, how the global markets, the global commodities and the currencies did. That's what you're going to analyze. First, let's look at the currency. Dollar index has moved down 0.75%. That's 103.12. So basically, it's in a cup and handle, and the handle has got a channel trend line, and it's falling down, and then it could support, take support ultimately near the 101 or 100 nearby. That's all, and then bounce. That's all. But in effect, it is still the sideways, and probably it could take a moment of support of the RSI 40 and then bounce. And 3 is not. So some fall, less than 1% of fall when the dollar index has happened, but it is reflected in the USD only 0.23% down. 82.3, still very close to the weakest rupee level. So there is trouble still there, but momentum is in the sideways zones, at least. It's very, you can see in the charts below that the USD INR is at the top of the peak of an ascending wedge. That also is a very close to the top, very close to the top of the trendline channel from where it had, that you can see that. So if at all this, 80H, the all-time high level is breached, then still you can further see a move towards 84 or 5 levels. It's very much possible, because that's what the charts indicate. But how many days and how many months it may take, we never know. But it's clearly bullish dollar that we are seeing there, and a weak rupee that may continue, or is what it indicates. But unless it moves, so there may be some relief in the dollar index, although it's not directly correlated. If it moves below the 100, we may see some improvement. But until then, we may remain here for months. Right? So dollar has gained something. Dollar has depreciated and rupee has appreciated a little bit, very slightly last week, can say, with the red candle that is in there. But we are still in the danger zones of the weak rupee that keeps troubling. Now, oil has moved up. It had fallen down very much last week. Right? It has fallen down a lot. Look at this previous week's candle, just heavily bearish. It has fallen down to 65, 64 kind of zones, and then now last week it is a 4.5% up. Still it is okay as long as it's remained below the 17. Right? But remember, we are in a trend line channel, and the bottom of that, right, and momentum has climbed back from the bear zones back to sideways. So we have to be cautious. As long as it made it below the 100 level, it should be okay. Should be some relief, but it should not be good for the oil market and companies that way, the equity. But for the economy as such, it may be beneficial to some extent, you can say. And the next one is the gold. Gold is having a couple handle, right? And we have seen a huge breakout. How much is that percentage of breakout? It is almost 20% of up is what you see there, and it has come to the same resistance on the channel top of the cup and handle, and face resistance and close red. The small pullback of how much is that? 0.5%, 0.5% down gold after hitting the resistance at the top. But what a move it was when the market was crashing. People shifted their money to the gold and it was spiking like hell. Now still it's just 70.7 from the all-time high level. So any breakouts could be, would the metal even more precious, right? Definitely. So gold has hit a resistance and then slowed down the breakout. Right? Never know what happens. You have to keep a close watch. So that's it. Moving on, the last one, global markets. That's why all the troubles. That's why the banks are crashing down. US indices is what we analyze. Dow Jones on left side and Nasdaq top. Downside here is S&P 500 with the broader index. Nasdaq's tech stocks and Dow Jones like our Nifty 50 can say. So Dow Jones is showing some green last week and previous week also. There was a Fed news interest hike rate which is as expected. Dovish but didn't help much. But yeah, there is some green because of that. The crackdown has stopped. And also Nasdaq has spiked up but held within the resistance zone. Same with the S&P 500 also. Some greenery has shown, but that greenery is not reflecting in our banks, in our indexes. I mean, so our sideways movement is made. Is maintained. Some green was seen last week, November, where we are. We are on the top. Spend multiple weeks, there, and then hit the resistance, and then fall back to the support zone, and then trying to recover and come back. So that's green overall. 1%, 1.2% of the Dow Jones, S&P 500 1.6%, Nasdaq 2.2%. So overall sideways momentum, and is attempting once again to climb back to the descending wedge top and break out from there. It's attempting that, but never know whether it will succeed or not. So there is some green in the US markets. If that continues, then it'll be good. So just to wrap up, currencies gained a little bit, not enough, still weak. Crude spiked up, it's okay. Gold face resistance after previous weeks breakout. US markets showing green after previous weeks breakdown. Overall, global cues are not as bad as it was last week, probably. Right. Now, here we have the stock picks two actionables, both on the short side. One is Lalpath Labs. It's a head and shoulder pattern. Volumes are decent. Momentum is in the bear zones. Trend is rising strength bearishness. Right. Reasonable risk over to the next support level of 1284 can be got if you are shorting below the previous candle's low. Mahindra made a very good stock, but there is a short opportunity because there is big volume spike and momentum medium has breached and gone down into the bear zones, and trend indicator is showing more strength on the bearishness, and it's a rectangular consolidation that is confirmed to have broken out, and it could go towards the neckline of the breakout zone towards the 961 possibilities there if you have a trail. But remember, it's a very good stock, but when it's showing giving a signal for a short, go short. Mahindra is not a bad stock, but you have tight stop loss, trade your stop loss, and then when the signals of the momentum and the trend and the price patterns give indications that short, do it. Right? Because both time frames are having bearish momentum and bearish trend, and price action also indicates the same. You don't have to wait and think, great things about Mahindra or any stock. Right? That's the way you have, that's why the momentum trade opportunities come in, and you have to play it that way. Right? So Lalpath Labs, the pharma sector, Mahindra, auto sector, having bearish short side opportunities that is there. Now, one more opportunity is in the Nifty. It's a weekly double diagonal counter spread that you see, and it's so basically in the near week, the next week on the monthly expiry 29 March, we'll short on both sides, put side and call side, with a reasonable range where we have found the support and resistances. And we'll hedge it with the far month. That's far week. That's 6th April. The next week's expires. Put and call options. We'll and then we get a very wide range. Look at the range: 16, 545, and 7300. These are the ranges that are very comfortable and then very less likely to breach. Profit may be less, but increase your portion size as per your capacity, and then consistently make money with a wider range in a safe zone, and you get the advantage of a spike on the volatility that could happen also. Right now, that's what is happening. The market is spiking up. Very good probability of profit of 88% also. Right, so that's a good strategy of consistently make money, small money, but consistent money. Right, and look at what costs you. Just 50,000 for one lot. Right, 5 lots, 6 lots, and lots. It's up to you. Your risk taking capability, but as soon as the VIX is above 20, stay out of this trade. And you can also adjust the trade if at all by any remote chance that it breaks out of that zone. Just have to or 2 ways of adjustment. One thing is risk on risk off, like basically you can roll down your put side if your market is going the other side, right? Or you can, roll up with the put side and roll down the call side if the other side is breaching. So that's the normal actions. Or you can, extend this if it is breaching. So take the loss and then extend, or book the profit and then extend the other side. Right? That's it. This means, and yes, let's wrap up. Last week, it's another further extension of the correction in the Nifty, especially which is what made a new lower low. Price action, momentum trend, volatility, everything is bearish. Momentum trend, Bollinger Bands, wicks, open interest, put call ratio, all are in favor of the bears. US indices are having selling pressure, definitely you can see from the channels. From the charts, we have seen that 18 news flows are continuing, especially in the US and the Europe. So there, the view is mild bearish, but the bank is still showing small strength compared to the Nifty. Both indices are still at a crucial support zone. This is probably the same priority bounce because we have given 11 to 12.5% of correction. It's a decent correction, and there is no other major reason that we should further correct towards the 15-18% and all that. That means heavy bearish. There's no real reason in our markets. Even when there could be resistance in the global markets, that's the only reason if at all we are falling this much. So there is probably a relief that could come in next week after taking a retest of the support of the previous support. So India VIX is still, 16% spike happened last week, but finally it managed to cool down and then end up the spike of only plus 3%. US markets are in trouble, definitely we know, but it's showing some green next week. So you have to keep a close watch if it's able to move up to at least towards the top of this bands, and if it is meeting that support zone where it is, it should be fine. But there is global recession, fears, inflation, trade, interest rate, RBI policy is coming next week. So all that COVID fear is also there. War fears, all that uncertainty still prevails. And rupee is still weak. Crude oil is giving some support, but it's getting negative by the weakness of rupee. So basically the levels that you watch in the downside, we are already seeing risk to wrap up. In the medium term, 16,650 is the zone. So the gap support, the confluence of multiple support Fibonacci, multiple support zones. That is pretty, we have trouble there. 36,800, similarly on the Banknifty. Downside, upside 7,800 gives some hope. 42,000 also gives some hope. Until then, we just going up and down sideways or bearish. And so no hope. Only hope comes in only about that. Until then, don't be bullish. Right? And after the downside levels are breached, be ready to be bearish. Don't become hope traders. So so always, as I say, use these opportunities of dip as opportunities to invest in SIP mode, small chunks. You can do this with the help of option strategies. Also check out the playlist for option strategies. Or you can use cash secured puts and covered calls for underlyings, etc. So one thing to keep in mind is never go for larger position size when the VIX is spiking up. Right? When it's about 20, cut short position size or stay out of the trade. You don't have to trade every day. Even if you're trading, make sure that you know what exactly the maximum loss is. Don't think about let the profit be less, but cut short your loss early. Make use of particular spreads, not actual strategies, and hedge. Spend some money on the hedge, and then make sure that you're still in the game. If you are overnight positions at that, always have tight stop losses also, right? So that's all I have to say. Bearish view continues for next week also. There's some hope for a bounce. Let's look forward to that. Play safe. Happy trading and happy investing. Same time, if you're not subscribed and watching this, please subscribe right away and then share to your friends. Please, we need your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Also, if you're interested in the subscriptions of the Telegram channel, please check the description and then do that. Right. Happy trading, happy learning, happy investing. Bye bye.